The new renaissance of self-employment. People are leaving these six-figure jobs and wanting to start their own business. Might be a good thing during the pandemic. That's what built this country, is capitalism and entrepreneurship. People are reassessing their lives, and just want to talk today about, self-employment and some things you need to be aware of. Let's get into it. It's not just minimum wage jobs that are open right now, folks. More Americans with good paying jobs are leaving companies during the pandemic and becoming their own boss as the great resignation continues. I think it's a good thing to an extent. Maybe with all the restrictions, people have had enough and their entrepreneur spirit will awaken and they'll start thinking for themselves more. They'll wake up that brain. Everyone's in their deep sleep in the matrix. So, being self-employed is another tax animal of its own. And you have to be prepared for that tax-wise. And now you will have to resign yourself to the fact that your tax situation is probably going to become more complicated being self-employed. Those taxes aren't taken out for you by the corporation you work for. So, freelancers, independent contractors, and self-employed people can, they can claim certain tax write-offs, but they also need more documentation. You need to be prepared for that. And they need to pay closer attention to the dates, not just the start and end of the income tax filing season. So, case in point, the Internal Revenue Service will start accepting and processing 2021 income tax returns for people who are employees with W-2s on January 24th. So that's coming up here. But for the self-employed, a date that has passed, the critical date arrives sooner, the January 18th deadline to submit estimated tax payments for the fourth quarter of 2021. So that's right here as well. They're going to be very busy this year. They're going to be a little more nice, I think, because of all the craziness going on right now from everything I read off their website. So if someone makes too small a payment, they run the risk of a refund that's smaller than planned, or an unanticipated tax bill, a prospect, no one wants right now. So be prepared when it comes to, becoming self-employed. Awareness of the estimated tax payments obligations, are the very most important thing you need to be aware of. From my readings, and I agree with that, and that's from the CEO of the National Association of the Self-Employed. So an organization that connects its sole proprietor and small business owner members with legal and tax experts. So that's something to be a part of and know about. We'll include that. So the Professional Association added 3,500 people to its ranks of approximately 20,000 members last year, the biggest one-year addition in the last 10 years, CEO said. So, he said he's worried that too many newly self-employed people across the country will wait deep into the tax season this year to understand what the IRS expects of them. That is going to happen. A lot of people get into this thinking it's the same, and they don't hold out those taxes or put them aside in a second account. I can't emphasize that enough. A good idea to start collecting documents and preparing now to file a solid return that will not, get gummed up by the IRS questions and backlog, and they're going to have a lot of backlog this year. There were roughly 14.9 million self-employed people in 2021 second quarter, and that's according to November estimates from the Pew Research Center. And that was a rebound from dips earlier in the pandemic and back to pre-pandemic levels, while employment among other workers remained shy of a full recovery, the research showed. So I can't emphasize this, the most important thing to remember is to stay current on your estimated payments. Failing to make estimated payments is probably one of the biggest uh, tax pitfalls facing new businesses, those quarterly payments. So we'll get into that a little bit. But the basis on taxes for self-employed people, uh, is the quarterly payments. Everyone pays their taxes in increments throughout the year, and tax season marks the time when the IRS processes return and squares up the bill. So with every paycheck, wage workers, with every paycheck, the wage workers, those who receive W-2s from employers, have a cut of their earnings taken out for income tax withholdings and other taxes, including the payroll taxes that pay into, big one, Social Security and Medicare. So it's taken out for you. You gotta set that money aside as a self-employed person. So if a person is self-employed, you're going to be the ones holding back a portion of the money and sending it to the IRS every quarter in the estimated tax payments. The money goes to obligations like we talked about, the income tax and self-employment tax, which encapsulates those Social Security and Medicare tax dues. So you got to get ahead of it. So taking responsibility for this may be a mental adjustment. It was for me, for people who were used to those employee paychecks with every payment that comes from a sale or a client. Self-employed workers need to get in the habit of remembering not all the money belongs to you, and a portion should always be earmarked for taxes. So I'm consulting for a company, a Fortune 500 company. So I got that, I got self-employment. So, I'm fortunate enough to have a father who's a tax attorney. So I send my stuff to him. I have to fly in every January. So it's critical to keep personal and business finances apart in separate bank accounts. Whenever someone deposits work-related payments in their business account, a good next step is to immediately transfer a portion to the business savings account, where it will sit ready for the next estimated tax payment. So you need to be on top of that. Apart from the January 18th deadline on fourth quarter payments, the schedule breakdown here, the schedule upcoming estimated tax deadlines for, self-employed people these are important dates, are April 18th for the first quarterly estimated payment, June 15th for the second quarterly, September 15th for the third quarter, and January 15th, 2023 for the fourth quarter payments. So, how do self-employed workers calculate estimated tax payments? That's an important concept. So the general rule is that each quarterly payment should equal roughly 25% of the lesser of 90% of what your tax liability will be on your tax return for that year, or 100% of the taxes shown on your previous year's return. It's actually quite simple. So the estimated tax payments may also be needed for state level income taxes. California, 13%. So there can be penalties for underpayment as well, the IRS says, but people can avoid those with payments that come to either 90% of the current tax liability or 100% of last year's tax return. And another way to sidestep underpayment penalties is if a person owes, let's say, less than $1,000 after factoring in all of the withholdings and credits, the agency, the IRS said. So owe less than $1,000 after factoring all the withholdings and credits. So a good bet for the newly self-employed is coming up with a business plan or your anticipated revenue. That's always hard in the beginning when you're starting, a business with your anticipated expenses and then what's going to be left over. But just factor in the general and set it aside in a separate account. Pay it quarterly. Pay it at the end of the year. You can work something out. You know, assuming the money is going in and coming out at a consistent pace throughout the year, the next step is slicing the estimated net income amount into four to calculate the estimated tax payments. So, you know, but keep in mind that other income inflows like a salary from a spouse or payroll will make those estimates trickier, he noted, and that's kind of the situation I'm in with some other revenue streams. So, you know, you have to be on top of that with your tax attorney. So what matters is that you have a good estimate and you stick to it every quarter and know what's going on, or at the end of the year and you have all that money there. So also remember that the estimated number isn't ironclad. If business is better than expected, the up-and-coming self-employed worker may have to dial up the amount of taxes paid. So, you know, if things are slow, they can dial it down. You will know where things are going well and when things are going not so well. So, you know, if you're crushing, you might want to pay quarterly. Having a bad year, keep that money aside, do it at the end of the year. The payments do not have to be in 4 identical installments. If your income is received unevenly during the year, you may be able to avoid or lower the penalty by annualizing your income and making unequal payments. So it's good to be on top of it every quarter, but if you're getting paid unevenly and let's say you're having a bad year, just know what you made, set it aside, pay it at the end of the year. If the tax rules sound, you know, kind of daunting, you know, it can be daunting just starting off on your own with this. So the bottom line is, I can't emphasize this enough, the better informed the estimates on the quarterly tax payments will come as someone grows, more familiar with their business and how it's working and adjusting those quarterlies and end of the years. So, you know, besides many organizations and agencies have resources and information, I'll leave some. And, you know, it's always good to make sure you know as a new business owner, you are not alone. So it is daunting. And, you know, I've been doing 1099 stuff on and off, you know, for 15 plus years, and the self-employed, and you just have to read the tax codes. You have to be on top of it. It's your business, and knowing the quarterly and knowing all that money is not yours and setting a percent of that, 40%, 50% to be safe aside, just in case. And then you got all your expenses and all these things and you factor out. And that's the good thing about being self-employed. You have a lot more write-offs. You need a lot more documentation. And, you know, you have losses in these things. And if you're investing in real estate like me, and you have depreciation assets and let's say your primary residence. So you got to factor that in. Don't try to be a know-it-all. A little bit of knowledge is a dangerous thing. I have my dad that I talk to, and I also consult with people locally in the States, not just California, other states, because we have property, and I'm trying to learn those tax laws and residency that I have in multiple states. So it can be daunting. And overall, you need to be on top of it. I have to be very organized now compared to just getting your employee check from all the Fortune 500 companies I work for. You don't even look at it. You just take out all the taxes for Social Security and Medicare. But in this case, you're running your own ship, and you need to be prepared and on top of it every quarter and at the end of the year, because you could have a great year or an uneven year, and you're like, okay, well, I'll set this aside for the end of the year, and we had a slow year, and I'll just pay this at the end of the year, but I got that business account set up for all those taxes. So I think it's an important subject, what's going on in the economy right now because of the change and the shift. You know, 4 or 5 million people, not just 10 million jobs for labor jobs, but, you know, high net worth people making 6 figures are leaving their jobs and reassessing their life and wanting to be self-employed, wanting to start new businesses. And I'm a big believer in entrepreneurship and doing your own thing. And I think, you know, this pandemic has caused people to reassess their life. So I think that's a good thing. But you have to be prepared. It can be very daunting running your own business. But I think it's a good thing because entrepreneurship and capitalism is what's built this country. And some people who've made all their money off capitalism at the top of the food chain now want to stifle you from making money. Capitalism, what separates this country from other countries. It's a wonderful thing. So I just want to share that with you. Self-employment. I think it's a good thing. Take care.